Good morning and welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll tell you everything that you need to know to start your day ahead of the curve so that you can spend a little more time planning the last weekend of the year. Let's start with the headlines. The Reserve Bank of India spells out why it stepped in to curtail unsecured lending, says it saw signs of borrowers shopping for loans. Crude prices slide further as shipping companies resume using the Red Sea route. Brent crude trades at around the $77 per barrel mark. Jobless claims in the U.S. rise by 12,000 to 218,000 for the week ended December 22nd. U.S. markets remain a little changed as traders price in possible rate cuts next year. Two of the three early risers in the Asia-Pacific region were trading, and they were both lower. Indian markets are set to record their second best year of gains since 2018, and benchmarks are slated to notch an 8-year winning streak. And India is working on a new e-commerce exports policy to make it easier for exports to realize forex. Now, crude oil prices retreated for the fourth time in 5 sessions as rising inventories at the key U.S. storage hub in Cushing, Oklahoma, partly offset a drop in national stockpiles to paint a mixed picture for demand in the U.S. Crude has also taken a hit because more shipping firms have said that they will resume using the Red Sea route, and that kind of eases concerns about supply constraints because of the longer route that was initially being taken around the Cape of Good Hope. Brent crude was trading marginally lower at close to $77.4 to the barrel. What you see on the screen is NYMEX crude, which is, as you can see, just below $72. Now, separately, U.S. weekly jobless claims rose by 12,000 to 218,000 last week, and that was higher than estimated, and this reinforces expectations of a rate cut or several rate cuts by the Federal Reserve in 2024. Markets remained little changed, with the Dow Jones gaining about 0.1% and the Nasdaq 100 in fact ending more or less flat. Asian markets, on the other hand, have opened mostly in the red. In fact, the two early risers that I looked at, the Nikkei 225 as well as the Australian benchmark, were trading lower, and that will likely point to a little bit of caution in trade in the Asia-Pacific region this morning as well. Is that the case for India? Let's turn to the F&O data to find out. Agam is joining in to give you some perspective on that. Agam, we're done with the last expiry of the year. What do we take into the new year?
Right. Well, Alex, and today is the last trading day of the year as well. What we are taking into the new year is longs, even as the benchmarks end with fresh lifetime highs. We're seeing markets go from strength to strength, and for now, as far as the January futures go, we're seeing further addition in open interest towards fresh longs, coming down to the Nifty, which did advance by around 0.5%. And for the Bank Nifty futures as well, they have also seen an increase in open interest towards fresh longs, which in fact opened and ended up with the 0.5% gains yesterday. Now, how does the option market play out as we move into the first week of January? Well, we're looking at a 500-point range for the Nifty, where we do have maximum open interest in the 21,500 put and the 22,000 call, and that's the 500-point range we're expecting the Nifty to move within, at least in the remaining 4 or 5 trading sessions. Let's move on and take a look at where we did in fact see a change, and because of the fact that yesterday we saw further gains as far as benchmarks are concerned, we also saw a lot more activities around puts, so where we did see a lot of traders write that 21,700, 21,800 puts as well. So keep an eye on that one. Let's move on and talk about stocks. And in terms of stocks, among those which in fact did see an increase in OI, where we did have Balrampur Chini, Hindustan Copper, and some of them, all of these stocks did in fact have been relatively volatile, but they did advance yesterday. And in terms of those stocks which in fact did see a bout of short covering, we did see Coromandel and RBL Bank, so keep an eye on that one as well. It's early days, so we won't have too many stocks in terms of unwinding, which is why that particular plate only had 3 stocks which did see a decline in open interest. But that said, we're set up for a very positive start to the year, Alex, and we're going to have to wait and watch whether or not we can in fact scale higher.
Absolutely. Agam, thanks so much for bringing us those details. Do watch the screen and stay with us over the course of the next couple of hours, and we'll take you through Market Open, of course. Let's focus on the banking space, though. And the Reserve Bank of India has sent out its latest report on the Indian banking system, and it has spoken about the results of the stress tests that it conducts on an ongoing basis. This, remember, is to try and get a sense of how the banking system's non-performing assets would rise in the event of significant stress or medium stress to the financial system. And it has also spoken about why it stepped in to curtail unsecured lending. We've got Mimansa to tell you about all of the key updates from the Financial Stability Report. Mimansa, good morning. What can you tell us about these two aspects?
Good morning, Alex. So yeah, the Reserve Bank of India in its half-yearly Financial Stability Report has highlighted that there is a risk build-up in the unsecured credit loan segment. Now this year, the risk profile of consumers, consumer credit borrowers has been downgraded more than the ones that have been upgraded. So while the quality of incremental credit has improved this year, but that is because the share of lower rated borrowers have declined at a industry level as well as at the group level. There is still some risk there's some risk build-up of credit in the credit loan, in the unsecured credit segment. Now the RBI has also noted that the share of personal loan accounts that turned delinquent within 12 months of origination has been relatively higher. Now this indicates that there are declining underwriting standards at banks and NBFCs. Around 43% of all consumer loan borrowers had at least 3 live loan accounts at the time of origination, out of which 7.3% of customers who have small ticket loans, which means loan size within rupees 50,000, had at least one overdue loan. So it points at a larger picture. As you said, that the RBI has conducted stress tests. The RBI has pointed out that under severe stress scenario, the gross NPA ratio of Indian banks may rise to 4.4% by the end of September 2024. Under baseline scenario, the bad debt ratio may remain at 3.1%, but under medium stress scenario, the gross NPA ratio at Indian banks may worsen to 3.6% by September 2024.
All right, thanks so much, Mimansa, for breaking that down for us. And in fact, we are going to talk about this in more detail. And at least I think that it might just be a better picture than it has for the banking system over the last decade or so, with the asset quality having improved. But we'll have the banking editor tell you about that in the editor's cut. You can catch that around 8:15 this morning. Let's talk about the latest update from New Delhi. The government has inked a memorandum of understanding with Shiprocket, an e-commerce logistics partner, to build capacity on the ground in 16 districts as part of its aim to boost e-commerce exports in the country. Janani has more details on this. She's joining us this morning. Janani, how significant is this? This is, I think, early days in a plan to increase e-commerce exports to several countries around the world. What can you tell us about the latest?
That's right, Alex. Good morning. What we're hearing now from New Delhi Ministry is that Shiprocket is one of the many other platforms that are in the pipeline for the district as export hubs, initiative. This was announced in the foreign trade policy, and this is something the government has been steadily building over time. If you remember, earlier in November, such a similar MOU was signed with Amazon, and this was for 75 districts, and this is happening in a metered pace. So far, only 20 districts have sort of been, facilitated or implemented, but 75 is the larger plan with Amazon. Now, with Shiprocket, it's 16 districts, and this MOU was signed as of yesterday. What we're also hearing is that ShopClues, eBay, and Walmart are in the pipeline in the talks with the ministry. What's more important is what the Commerce Ministry is doing to facilitate the overall environment. Now, it's in talks with the Department of Revenue in the Finance Ministry to enable an e-commerce export facilitation zone. Now, what that will do is give it faster export clearances. It's also in talks with RBI now to help ease the facilitation of, and the realization of forex. Now, usually, what tends to happen is realization of forex has, for B2B business at least, has a 270-day timeline. Now, since many e-commerce exports are, stored in warehouse facilities and sold over a period of a year, they need a little more help, for the realization of forex, and the government is in talks with RBI to help enable that. Surprisingly, we've also heard that, ROTTEP benefits for some of these e-commerce exports that goes to the postal and the courier route will be extended. Now, ROTTEP is, the remission of duties and taxes that many of these exporters face in the manufacturing and the distribution process. So these are all some highlights that we're getting to hear from New Delhi.
All right. Thanks so much, Janani, for bringing us those details. We have to slip into a very quick break. We've got stock-specific action on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. Now, there is speculation and there are expectations building of a cut in retail fuel prices, and that's been doing the rounds for a little while. The question is this actually going to happen? Is this going to be a New Year gift from the government to the people, or is this not going to happen immediately? The question that is being posed this morning, maybe Vikas will have some answers to that. Vikas Srivastava is joining in, and he's spoken to a couple of people. Vikas, what have the people that you've spoken to said to you?
Yeah, right, Alex. The speculation has been doing the rounds for quite some time now. But for time being, it has been put to rest by two ministries that NDTV Profit spoke to. They have denied that anything is being worked out soon. But given the kind of profitability that the OMCs have seen in the last 6 months or 7 months, the combined profit has increased to almost 58,000 crore for them. So that has given the speculation to the market with elections around the corner that government may look at cutting the retail fuel prices by almost 8 to 10 rupees. But the speculation is also based on a fact that the crude oil prices have dropped significantly. The average in FY22 or calendar year 22 was $93 per barrel, which has come down to almost $77 per barrel. Also, if we look at India's crude basket, that is close to $74 per barrel. So that gives enough headroom to the government closer to the election to cut the fuel prices, which will also have a higher recall value and may help the people, common people who had been facing the brunt of this high price. Although crude prices fell down, the retail fuel prices were not cut since last 19 months. If it happens anytime soon, so it will be after May last year when government had cut the excise duty by 8 rupees and 6 rupees on petrol and diesel respectively. So that is what is being expected. So this is as of now a speculation, but let's see. There may be something like being worked out with the government.
All right. Thanks so much, Vikas, for bringing us those details. Nothing yet is the answer to the question that we were posing. So let's see how that pans out, and we'll bring you the latest updates once we get confirmation of that. For now, let's turn to the key stocks that you need to watch out for in trade today, and some of them are on the back of fundraising plans. We've got Anushi joining in to tell you about a couple of them. Anushi, morning. What are you picking up?
Morning, Alex. So I have 3 stocks for the day, starting off with India Shelter Finance Corporation, which is the recently listed company. It has come out with its Q2 FY24 results, wherein it has seen about a 43% increase in its interest income to rupees 168 crore, whereas it saw about a 67% jump in its net profit to rupees 60 crores. Meanwhile, its gross NPA and net NPA ratio stood at about 1% and 0.72% respectively. So we can expect some positive here with the stock being down about 3% from its listing date. Now coming to the fundraising plans, as you mentioned, we have the likes of Punjab National Banks, wherein the board has approved a raising of rupees 7,500 crores during the FY24-25 years. Here, the fundraise could be through the QIP or FPO route or any other modes, which would be decided later. In the recent update as well, the company had raised about 1,153 crore via bonds on a private placement basis. Lastly, we have Swan Energy, wherein the board has approved raising up to rupees 4,000 crore via multiple instruments. Swan Energy has been in focus recently with a lot of bulk trades in place, with the recent being Hypnos Fund, which had sold about 1.25% of stake in the company.
Okay, thanks so much, Anushi, for bringing us those details. Those are the stocks that you should watch out for. We've also got an update on GAIL, I believe, and essentially the Petroleum and National Gas Regulatory Board has set the tariff for GAIL as KG pipeline. So now consumers will have lower gas prices ostensibly. Let's see how that pans out. Mika is going to break it down for you and tell you the details. Mika, what can you tell us about that?
Yes, so the tariff is placed on the Krishna Godavari pipeline, which is set off the east coast of India. Now, back in June, GAIL had proposed a 37.01 per million metric British thermal unit tariff, but the board has now set that tariff to the rate of 8.4 per MMBTU. Now, the tariff is set for the transportation of the natural gas through the pipeline. Now, what this tariff indicates is, like you pointed out, Alex, is a lower gas price for consumers, which is beneficiary for industries as well as households that do rely on natural gas. But from GAIL's perspective, what happens is their revenue per unit for the gas transported via the pipeline will decrease significantly. But on the flip side, the lower tariff could also incentivize the producer to, send more gas to the pipeline, and it also gives the company a a competitive edge, compared to its peers, because it's going to be charging less for the gas transported, and it could attract more clients and help secure its position. We also have a Motilal Oswal note on GAIL that came out today, and it's maintained a buy rating at a target price of 195 rupees, which implies a 24% upside, and it's also said it's one of its top picks for 2024. Now, the brokerage expects a 9% volume CAGR over FY23 and 26, and the volume growth will be fueled as the oil exploration companies like Reliance, Oil India and ONGC have been increasing their domestic gas output. It also expects Indian gas consumption to increase with 5 new LNG terminals coming on stream, and it expects GAIL's transmission EBITDA to the a contribution to the total EBITDA to increase to 46% in FY26 versus 40% back in FY23, which will help the company's earnings visibility. And lastly, it expects the petrochem segment to become profitable at the EBIT level.
All right. Thanks so much, Mika, for bringing us those details. Now, DAM Capital is bullish on steel pipes and tubes as infra, oil and gas, transmission, water supply, all of that are going to require those pipes. DAM Capital initiated coverage on Venus pipes and Ratnamani metals and tubes with a buy rating. And Varsha Chandani is here to tell you about the key details of that coverage initiation. Varsha, what can you tell us? Morning.
Good morning, Alex. So as you rightly said, so DAM Capital has initiated coverage on steel pipes and tubes. Now this is on the back. So let's see the rationale behind this initiation. So oil and gas growth tailwinds to drive demand for line pipes over the medium term. So around 15k kilometer pipeline has been added currently. Also, government aggressive plans for water supply should also drive consumption of steel pipes, and also government capex have also been accelerated in recent years, and which would eventually pull up the private sector capex. Now let's see investment rationale for Venus pipes, wherein Venus pipes is building niche for itself in the steel pipes, which is a low margin which is a low volume but high margin product. And after 8 years of operation, if you see the market share for Venus pipes has been around 4 to 5% versus Ratnamani metals, which has market share of 8 to 9%. So DAM Capital expects this gap up to steadily close in the medium term. Also, capacity augmentation to improve volume growth for the company, and improving value mix, then your backward integration should help to aid EBITDA margins. Then next we have Ratnamani metals, wherein also they have got buy rating. Now capacities on hand to drive growth, and cement, also the cement leadership position. Also the diverse product mix is going to help them to reduce the commodity price risk, which will aid the profitability. Also the improvement in capacity utilization, then new products will actually help to improve their margins. Also lastly, if you see the product mix in the recent years has kept the margin stable despite industry cyclicality.
All right, thanks so much, Varsha, for bringing us those details. Now, 9 virtual digital asset service providers were issued show cause notices over alleged compliance irregularities under the Prevention of Money Laundering Act. Janani is joining us, to tell us more about this. What does this mean, Janani, for some of these major crypto firms like Binance, KuCoin, and Huobi?
That's right, Alex. These 9 crypto exchanges have been issued show cause notices over alleged non-compliance under the Prevention of Money Laundering Act. And this was something that follows on the back of a registration requirement under the PMLA that the government had initiated earlier this year in March. Now, like you said, Binance, KuCoin, Kraken, these are some of the bigger names of crypto exchanges. But it is important to note all of these are offshore crypto exchanges. However, the law states very clearly that be it offshore or onshore, when you're operating in Indian territory and you're operating in fiat or virtual assets, fiat currencies or virtual assets, it has to be registered with the FIU, which is the Finance Intelligence Unit under the Ministry of Finance. Now, as on date, 31 virtual digital asset providers, service providers have registered under the FIU. And we'll have to see still how these, crypto platforms respond to it. But as of now, what this immediately means is that MeitY, which is the Ministry for Electronics and Information Technology, has been asked to block the URLs to these crypto exchanges, effectively putting a stop to any access, formally and legally on the Indian shores. That's what we have for you as of now. We'll stay on top of the story for reactions from these exchanges.
All right. Thanks so much, Janani, for bringing us those details. And remember, of course, after the taxation change on cryptocurrencies, in any case, you have volumes in India that have dried up very quickly and aren't very significant as things stand right now. One last pair of stocks to talk about. Tata Coffee's merger with Tata Consumer Products is to be effective from the 1st of January 2024, and the allotment of the shares is to be determined on the 15th of January. Mahima Vashrajani is joining in to give you some of the details of the merger that has been in the works for some time now, right? Mahima, what's the latest that you can tell us? Yep.
Right, Alex. As you rightly mentioned, it has been in works for quite some time now, but finally they've decided on the effective date as 1st Jan, and allotment will be done from 15th of Jan. Now, the scheme of arrangement is such that the plantation business of Tata Coffee will be merged into TCPL Beverages and Food, and the remaining business of Tata Coffee will be merged with the Tata Consumers Product Limited, and post-merger, Tata Coffee will stand dissolved without winding up. Now, what does this mean for shareholder? Basically, TCPL will be issuing 1 share for every 22 shares held for Tata Coffee Limited for the plantation business, and for the remaining business, TCPL will be issuing 14 shares for every 55 shares in TCL. So post the arrangement, the shareholders of TCL will get 3 new shares of TCPL for every 10 shares of TCL. Now, if you talk about the share performance of both these companies, Tata Coffee and TCPL, if we compare the 6 months and YTD performance, they have been for Tata Coffee 6 months, it has been around 24%, and for TCPL, it has been around 21.8%. And YTD, if we see, the Tata Coffee has given a YTD return of 41.7%, and TCPL has given 37.6%. So overall, if we see, the entire merger scheme is in this order.
All right. Thanks so much, Mahima, for bringing us those details. Now, that brings us to the end of this particular edition of All You Need to Know. As we wrap, though, take a look at some of these visuals that are visuals of dense fog that has engulfed New Delhi. And in fact, the IMD has forecast dense to very dense fog at most places in the morning. Delhi has already been given a red alert. If you are venturing out, do stay safe. Up next is India Market Open. Do stay tuned. This is NDTV Profit.